Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending December 8th, 2023. Let's get into stocks. We've seen the stocks thus far do very good this year, recovering from a lot of the losses from last year. Last week, the U.S. stocks were higher, with the benchmark S&P 500 going up 0.24%. The Russell 2000 was up 1%, and the NASDAQ added 0.7%. Overseas, the developed markets, which is the EFA, rose 0.39%, while the emerging markets were actually down 0.7%. Now, by size, the small caps led the gains. Communication services and discretionary were the best performing sectors, while energy and materials dragged down the overall averages. Year to date, you're seeing the S&P is up over 20%, NASDAQ's up over 30%. So a lot of the losses from last year have been recovered, but not all. So in the fixed income, interest rates declined to their lowest level since the end of August. Bond values rose, and after a government report showed that job openings declined. Now, the drop reduces the pressure on the labor costs and thus inflation, which is kind of the goal. For the week, however, the benchmark 10-year Treasury was little changed at 4.323% after a separate labor report was released on Friday. We'll get into that in a little bit as well. We've seen that 10-year Treasury come way down, so we're starting to see that happen. So hopefully we're going to see rates start to get cut pretty soon. Let's talk about commodities. Oil prices fell again last week, with the price of West Texas crude down 3.83% to $71.23 a barrel. This marks a 22.33% drop from the recent high at the end of September, as investors are concerned that energy demand is falling in the U.S. and China, while supply from the U.S. is at its record highs. So let's go to economic data. The U.S. job openings reports show that there were 500,000 fewer jobs available than the consensus expectation and the previous month's report. On a year-over-year basis, job openings were down 16.6%. Also, non-farm payrolls rose by 199,000 in November, bringing the unemployment rate down a tick to 3.7%. However, after adjusting for the return of union workers to the workforce, the rate was more in line with the prior reports. Now, over the past 12 months, average hourly earnings grew by 4%, declining from the previous monthly reports. You're going to start to see things shake a little bit. We're seeing things go up a little bit. You're also going to see that after the strike is over, we're starting to see that some jobs are going to be cut. So we'll see how that plays out. Let's talk about company news. Advanced Micro Devices, which is AMD, a Core Select and G33 holding, forecasts that its artificial intelligence or AI accelerated market will grow over 70% annually over the next 4 years to over $400 billion in revenue. This was about twice the previous projection and drove the shares higher by 6.2% for the week. We've been seeing this all year with AMD and with a lot of the AI companies. Broadcom Inc., which is a Core Select holding, recorded earnings that were ahead of expectation. The board increased its dividend by 14%, the 13th consecutive year of increases, which is awesome. The stock's yield for the semiconductor designer and manufacturer is 2.22%, not a huge yield, but nice. And the new rate, shares rose 1.54% for the week. Let's get into Lululemon. A G33 holding reported sales and earnings that beat expectations. Sales rose 9%, while e-commerce sales rose 19%. In China, sales rose 53%. The board authorized a $1 billion share repurchase program. Shares are up almost 5% for the week at 4.94. And this concludes this week's market summary. Thank you so much for being part of the ARA family. If you need to get a hold of us, you know the number, 855-756-5700. Visit us at aradvisorsinc.com. We hope that you're getting ready for a wonderful Christmas holiday season and that you're spending time with your family and loved ones. God bless you. We'll look forward to seeing you again next week.